Good afternoon, everyone, and welcome to the Market Close Report for Wednesday, the 29th of July. Well, the Aussie market has had quite a nice little run so far this week. What a difference a couple of days can make. We had the ASX 200 today lifting by 90 points, or 1% to 9,038 points. It means we're on a 3-day winning streak. We've gained around 3% so far this week. It's the second best week of the entire year so far as well. We've also hit a 5-month high in the process, and it basically means that we're back above 9,000 points for the first time in 3.5 months. So certainly this is making the year so far not look quite as underwhelming as it previously was about a week ago. We're up close to 4% now since the start of the 2026 calendar year. Now, one of the key catalysts for the improvements today, at least, was an update on inflation for June and the June quarter in Australia. Essentially, we've had cooler than expected numbers, both at the headline level and importantly at the underlying or trim mean level as well. So basically, trim mean inflation, which is what the RBA looks at quite closely, as do many economists, that actually rose by 3.6% over the year, so unchanged on the prior read. It's still way above what the RBA wants that to be at, which is 2 to 3%, but the fact that it was softer than anticipated was well received, and it's had quite a dramatic effect as well on market pricing for interest rate hikes this year. So the market now thinks that in 2 weeks' time, which is when the RBA meets next, there's only a 2.5% chance of a rate hike. Now, a couple of days ago, that was sitting at 30 to 40% likelihood, and now it means by the end of the year, the market thinks there's only roughly a 50% chance of an interest rate hike. Again, at the start of the week, that was sitting at closer to 90%. So it is a worthy reminder of how quickly things can change in markets as far as what they're expecting pricing to be like, especially when it comes to updates on inflation. Most importantly, numbers on jobs can also have a bit of an effect as well. We've also had some stronger earnings coming through in the mining sector, which was well received, but there are still a few risks ahead that I think are just important to be mindful of. Tonight or tomorrow morning, we've got the Fed meeting wrapping up, and this is expected to end with interest rates on hold in the US, but there is an expectation they could get a rate hike in America by September or October. So this is certainly something to keep an eye on tonight. We've also got major US earnings due over the next couple of days. In fact, 4 of the world's biggest companies will be out with their earnings in the US by Friday morning, so that's going to be a potential driver. And then there's always risk of a re-escalation of the US-Iran tensions. Now, things calmed a bit early in the week, but even just an hour ago, oil prices spiked because of joint strikes in Iraq by the US and Saudi Arabia. Now, let's look at today, though, because across the sectors, we had all 11 sectors improving today. Certainly it was the healthcare sector that stood out most, up by more than 4%. We'll get to the reason why in a moment. We also had consumer discretionary stocks, perhaps benefiting from the softer inflation data and what that could mean for no rate hikes this year. So that rose in the order of 2.4%. And then we had improvements coming through across all other sectors as well. If we look at some of the big winners of the day, we had in the retail space, Lovisa standing out. It was the best improver, lifting by almost 8%. Now, keep in mind that it hasn't had a great year so far, so it still is down quite heavily in 2026, as are other stocks like JB Hi-Fi and Harvey Norman. But whenever we get updates suggesting that we might not get more rate hikes this year, we've already had 3, of course, in the early part of the year. That might be helpful. We've also had Mineral Resources today, lifting by 4.8%. Now, it coincided with its quarterly report out this morning, where it basically met guidance across all of its key operations. Big lift in iron ore production and sales that seemed to help offset softer prices, and stronger lithium prices actually helped drive revenues for that business. We had Rio Tinto, one of the key influencing factors as well. It was up about 3.7% today. Now, it was out with some half-year results, raised its interim dividend, reported a 47% lift in first half profit. Stronger commodity prices and production was helpful here. Iron ore still its biggest earner, accounting for over 40% of earnings, but copper is catching up. It accounted for around 36% of profits. So Rio rose, and it seemed to inspire some buying ahead of the, official reporting season over the course of August for many Aussie listed companies. And then CSL, certainly the standout in the healthcare space, lifting by more than 7% today. Now, it has still fallen very heavily this year and last year, and has struggled for a number of years actually, but today there was a short announcement saying that it's carrying out some clinical trial work for an enhanced plasma manufacturing process. And Plasma is important because it acquires plasma or manufactures plasma, and it uses that to create its highest selling product. So that was helpful for the stock today. Now, as far as losers are concerned, we had stocks like Develop Global down by almost 18%, received a price target cut from a broker a day after the miner actually handed down its quarterlies, which showed some pretty strong improvements in revenue and a jump in copper production. But we've got to keep in mind for Develop Global that its shares did double in price last year. Liontown down by almost 8%. The lithium producer came out with a quarterly update today. Bellevue Gold down about 6%. It was out with a quarterly yesterday and received a couple of price target cuts today. And Deep Yellow down 3.5%. Uranium Miner, which also received a price target cut a day after handing down a quarterly. So it was a bit of a trend as far as the underperformers are concerned today. Now, if we cast our eyes forward, I've already mentioned some of the main things to be on the lookout for. The fact we've had 3 straight days of gains, of course, does create a little bit of a risk, considering that we're above 9,000 points, that if things do go pear-shaped in the Middle East, that there's always the possibility of a spike in oil prices even further and potential weight on the market. So we'll have to wait and see. As far as currencies go, we had the Aussie actually weakening against most today, sitting about 69.5 US cents, but it did also soften against both the euro and also the Japanese yen. On that note, have a great evening, everyone. We'll see you tomorrow.